Welcome to today's market report. European stock markets are seen opening sharply lower on Friday, ending the week with confidence at a lower ebb given fears of more economic damage from fresh COVID-inspired lockdowns and with next week's US presidential election causing uncertainty. DAX futures traded 1.6% lower, CAC dropped 1.5%, FTSE fell 1.2%. This week's announcement of fresh restrictions on social gatherings and economic activity to combat a second wave of COVID-19 cases in Europe have prompted concerns the region could suffer a double-dip recession. The European Central Bank at its meeting on Thursday noted that the economic outlook had darkened notably, with President Christine Lagarde sending out strong signals that further easing was on its way in December. Lagarde surprised with more dovishness and determination than expected, posing the only question if the ECB agrees on the need to act in December. The main economic release on Friday will be the third quarter GDP number for the Eurozone later in the session. This is expected to show a rebound from the previous quarter's drop of 11.8% and follows the French economy showing record growth of 18.2% in the previous quarter. Democrat Joe Biden maintains a comfortable lead over incumbent President Donald Trump in the polls, but a great deal of uncertainty over the outcome remains, including whether the result will be accepted without legal challenge. In corporate news, Spanish bank BBVA's third quarter net profit fell by much less than had been expected, continuing the recent trend of European banks outperforming admittedly weak expectations. The tech sector will also be in the spotlight after corporate behemoth Facebook, Amazon, Apple and Alphabet all released results after the US close on Thursday, while all of them beat consensus forecasts. The lack of optimistic guidance and sharp rises in input costs at the likes of Facebook and Amazon made for a gloomy after-hours trading session. Oil prices continued to head south on Friday, on track for a second consecutive monthly fall as traders worried about the effect the surge of coronavirus cases and subsequent lockdowns is having on global demand. Crude futures traded 1% lower at $35.81 a barrel. Brent contract fell 1.1% to $37.44 per barrel, falling to levels last seen in May. Gold futures rose 0.1% to $1,868.85 per ounce. On the FX front, GBP USD quickly recovered around 40 pips from sub-129 levels and refreshed daily tops in the last hour, albeit lacked any strong follow-through. The pair struggled to capitalize on the previous day's late rebound of around 45 pips from near 2-week lows and was seen oscillating in a range through the first half of the trading action on Friday. The US dollar bulls refrained from placing fresh bets amid the uncertainty about the actual outcome of the US presidential election. A subdued USD demand was seen as a key factor, lending some support to the GBP-USD pair. However, concerns about the economic fallout from the continuous surge in new coronavirus cases continued weighing on investors' sentiment. This was evident from a steep decline in the US equity markets, which extended some support to the greenback's relative safe haven status. The greenback was further supported by Thursday's stronger US Q3 GDP growth figures. This in turn capped the upside for the GBP-USD pair. Below the uptrend 129.28 lies 128.14, the June high. Failure here is expected and will target 127.06, the 200-day moving average, then 124.45 and 122.50. Rallies are likely to find initial resistance at 55-day moving average one at 130.10. Above here lies the 132.01 March high and the 134.68 multi-year downtrend, and if seen we could expect this to again hold and provoke failure. The latest weekly surveillance report from Public Health England shows that the pandemic case rates in England are rising for all age groups except 10 to 19 years olds. The International Monetary Fund advises British Finance Minister Rishi Sunak to increase public investment and bolster welfare support for people who lose their jobs because of the crisis. Eurodollar is struggling for direction around 116.70, extending the leg lower on Friday, shedding around uninterruptedly since Monday and meeting contention around the 100-day SMA in the mid-116s so far this week. The euro remains underpinned by auspicious results from the domestic fundamentals. The dollar index was up 0.1% at 93.998. This is today's market news. Thanks for listening. We'll see you next time.